Good evening, dear colleagues. Today is Sunday, as always, with you. I wish you all a happy New Year and Merry Christmas. Health to everyone, prosperity to all relatives and friends, and of course, big profits. And, dear colleagues, a small announcement in Community Forex Times has been updated. Now, every morning, every day, there will be 9 forecasts on 9 trading instruments. I beg your pardon, forecasts on 9 trading instruments, according to the Chicago Mercantile Exchange, and based on Ralph Elliott's wave theory. And also, as part of the forecasts, which is called a look ahead, there will be forecasts coming out throughout the month on 2T trading instruments. Well, I don't think there will be 23 forecasts a month, but I think there will be 20 forecasts a month. The forecasts will be medium term with a workout from a few days to a few weeks. I will update these forecasts about twice a week as they are medium term. Constant daily updates will not be necessary. I will update them as things happen in the market in these forecasts, but there will definitely be updates to keep you up to date on what our last forecast was so you can navigate. So here we go. So euro dollar, according to the Commodity Trading Commission, we on the euro dollar saw a 2% increase in buyers in the reports. However, the decrease in the capitalization of the trading instrument to $215 billion, 139 million makes me wonder. I wonder who left the market. Having taken 3% of money, that is, the capitalization of those buyers who came to the market was lower than those buyers-sellers who left the market. I wonder who took more money, but in fact the trend is upward and there are 2% more buyers. Therefore, option number 1, the development of events, is quite simple. We have the first impulse wave, and most likely it is a corrective wave, and we are in some correction of a higher order wave, in the correction of AC. AC, after which, most likely the price will continue to decline. However, dear colleagues, there is also plan number E. I will explain now. Why plan number E? I don't like plan number E. It is that most likely a triangle has formed here. This is wave B. Already wave B has taken place. After that, we go to wave C. Since the triangle is the penultimate wave, it is most likely that after the formation of wave C, we will fly away to buy. But, dear colleagues, it is necessary to decide now what we should do in the short term. And I will explain why I like the second option less than the first one. So first of all, we see an increase in buyers, that is, professionals with their futures contracts say that they entered the market from Tuesday to buy. There were 2% more professionals, exactly buyers. Secondly, dear colleagues, you know very well the decision-making levels. In favor of, namely, it is the range of moats and premiums, the level of premiums moats, and the level of loss market maker. I apologize just a second now. I just want to find the option moats that are at the top. They're also higher up. Well, at least we have now found the level of loss market maker upper bound with you. So the market maker's loss level of put options and their premiums. Did you know that the hedge level is the level of maximum open interest in option contracts, which is what the professionals are using to make their buy and sell futures trades? If we have a hedge of put options, the level of their premiums is nothing but the level at which the futures contracts are likely to open with maximum volumes. Consequently, even if I really wanted to sell, the rules that govern me do not allow me to do so, because the increase in buyers is 2%, and the price is already in the strongest support range. Therefore, dear colleagues, I will stick to plan number 1, namely the growth of the trading instrument within the corrective wave beta and from the range of 50%, 61.8% on the Fibonacci grid, or from the level of 78.6%. I apologize why the sigma wave is here. Of course, yes, either from the 78.6% Fibonacci level with the formation of an NBA pattern. I will be making a decision to enter the market to sell. If someone still has itchy hands or wants to hit on the idea of selling the euro, please you can place a pending order below the local low of wave pi in the corrective wave alpha flat, hang on wave alpha within a triangle. Consequently, the stop loss is just above the local maximum of wave A, and in the triangle, a pending order below the higher order wave A in the corrective model. In this way, from the fact that perhaps there will be no correction yet, and the market will immediately fly down from the triangle. And you will not believe, dear colleagues, but the fact is that for gold, the situation here is a little bit more complicated. And again, there are also a couple of options, namely, if you and I had a 2% increase in buyers on the euro, on gold, we see, on the contrary, a decrease in buyers by 11%. And that tells us that we have one corrective wave, we have a second wave, and we are missing, right? Most likely missing a third wave. But again, dear colleagues, we come back to the support resistance levels, and in the dance of the trading instrument, TKO is in a range in the strongest support range, namely options T and the premium level of options T. So at this point, again, I assume that the price movement will be as follows. I'm going to try to visualize it now. Hence, we have an impulsive root wave. We go up, and only after that we fly down globally. Globally, it is this probable flight down that we need to catch very strongly. But for those who want to trade gold very, very badly, you can trade this sale. I think the price is likely to go down as early as the first half of Monday, Tuesday, first half of Wednesday. And after that, you can still try to buy, for the simple reason that most likely there will be another three-wave corrective structure, after which the price will already be looking down. Separation, here we have, in fact, let's depict it all beautifully. Wave A of the higher order, wave S of the higher order, here wave A of the lower order, wave S of the lower order, and in wave C of the lower order, wave C of the higher order. So that's it. Yeah. And of course, lower is likely much, much lower. That's most likely. I'm guessing that's the decline. What could go wrong? I'll explain what could go wrong. All right, I'll show you a little bit differently. This way, and what could go wrong? What do we have? There's most likely an initial diagonal triangle in the wave, and I don't like initial diagonal triangles very much, for the simple reason that their correction can be either very small or it can be very big. You can't guess. Dan could have ended for the simple reason that if we go to a smaller time frame, we will see that this movement may not be an impulse, but a correction structure. The AC, and so, as we have with you, is most likely the initial diagonal in the wave, and a new structure in a wave of the lower order, a new structure, a law at the beginning of the development of a large downward movement. But please note, dear colleagues, as in the first case, 1, 2, 3, 4, 5, as in the second case, let's take a green one. The green case is already down. You and I have the same down. Therefore, if someone does not want to wait for the development of events, but wants to trade gold right now, you can trade this wave. I think that there should be no big problems. If the price goes up, and here you will get a stop loss when you work on selling. Don't worry, most likely, but this A is the end of wave B. Then we fly away on wave C, and you will normally then sell in any case, as long as the great prospects of this trading instrument is on the sale, within the framework of wave A, wave B, and missing wave C, that is approximately in this structure. Dear colleagues, in order not to prolong our communication for a long time, and I have quite a sore throat, I will say for all the haters who very lately like to write to me that on this trading instrument A is nothing but the S&P 500 index. I apologize, it is the Dow Jones index, but it is the same for the S&P 500 index. They have a positive correlation right now, quite with a large correlation index. I would still expect a decline to the 31,000 level. This decline may be already started for the next week, 2 weeks, or we may see another small correction with a new high, after which we will fly down to the level of 31. Dear colleagues, I myself got 2 stop losses on this move, but I am not discouraged at all. There was 1% one stop loss and 1% another stop loss. I lost 2% on this drop. I'm thinking of making 30% to 40%. I hope you guys are with me too. Thank you very much. Dear colleagues, once again, I invite you to the ForexTimes community. Since we have a very good update starting from Monday, January 15th, I will start publishing quite a few forecasts every week, which will be called A Look into the Future. once again between 18 and 20 forecasts in 1 month. Actually, the number of trading signals will be dramatically increased due to these forecasts. So I invite you, dear colleagues, to the community Forex Times. With you was D.N. Strelkov. Bye-bye, everyone.